Analyzing candlestick charts makes it very clear as to when the strength of the buyers are stepping in, as we can see in this Morningstar signal with a best friend startup, a doji gap up, back up through the T line, started the uptrend. We know when the uptrend might be fizzling. Notice the gap up shooting star, followed by a bearish engulfing signal, profit taking occurring. It could be telling us that the next downtrend is starting, except we have the visual identification that the Dow traded indecisively at the 50-day moving average. Now that becomes relevant because everybody's watching to see what's happening at the 50-day moving average. Utilizing candlestick charts tells you exactly what the investor sentiment is at that level, and today's positive trading was further confirmation that they apparently were not trading back below the 50-day moving average. The S&P 500 confirmed that when it pulled back indecisively. In this case, it used our 3T line as support and started back up. And the NASDAQ is providing the potential of a bobble breakout, which is a J-hook pattern that can be specifically identified by using a resistance level like the 50-day moving average, that if it comes back up through that level, you've got a J-hook pattern which produces an extremely high probability that this is wave 1 and wave 3 could take you back up to test the highs based upon the high probability results of identifying a bobble breakout. If you took out the 50-day moving average, this would still be a J-hook pattern, which is a high probability trade setup. But the reason it could be assessed that this was just profit taking over the last few days versus a full-scale reversal was the fact that after the strong buy signal in the transportation index, they could never close the transportation index below the T line, number one. And number two, on days that the market was selling off, the transportation index was still trading stronger. So that kind of gave the illusion or the impression that the market wasn't selling off. It was just kind of shifting. Knowing which patterns create the high probabilities of strong price moves, and knowing that the market was not selling off, we could identify the patterns such as a fry pan bottom in XON, and notice what happens on a fry pan bottom breakout. Not only did it break out, but it gapped up through the resistance level, telling us there was a whole new investor sentiment in this trade, producing a very strong move to the upside. You add all the elements of analyzing what the market is doing and what individual stocks are doing, it's very easy to pinpoint which stocks have the biggest upside potential. When you can easily analyze each commodity, such as gold, you can see it was forming a J-hook pattern. There was your kind of your Morningstar left-right combo using the T-line as support, showing a J-hook pattern. Knowing that gold was going up in price made it easy to analyze individual stocks like AU, also doing a J-hook pattern, starting with a best friend gap up, doji gap up, producing the prospect of this wave right here being the same magnitude as this wave right here. This is not rocket science. Investor sentiment works the same way time after time. It's done so for the last 300 or 400 years, which is exactly when the Japanese rice traders used the candlestick signals to identify the high profit patterns and the patterns that are usually created over and over by investor sentiment. That'll be it. We'll see you in the chat rooms.